Okay. Hi, everyone. Welcome to our inaugural convening of our Climate Finance Investment Network webinar. I'm Sashi Jaitilika. I work with USAID as a Senior Climate Finance Advisor in our Bureau for Resilience, Environment, and Food Security. And I'm the COR for the Climate Finance for Development Accelerator, which is what brings us here today. So hopefully everyone can hear me and have no technology issues, but maybe, yeah, thanks. But great to see so many of you here together today. We're going to talk a little bit today about what the CFIN is, what we're planning to do and then over the next year or two, and hopefully gather some of your insights as well on how better we can use our network. I think we understand, that the need for financing in climate is pretty significant. We now know that there's at least a gap of $2 trillion a year in reaching our goals. And especially in the countries that we work in the developing nations and emerging markets, the financial burden is beyond what can be serviced with their existing resources. And so in order to reach these goals, we're hoping that we can foster some partnerships across public and private sectors and support disruptors and entrepreneurs that might be able to help us bridge this gap. We're looking to not just bridge the gap, but leapfrog some of our challenges and think through what are the innovations that we can take from also countries in the West and the global North to the South, such as both in renewable energy, energy efficiency, wastewater management, stormwater management, all the things that help our cities run and have been able to then hopefully adapt to the changing climate. We launched CFIN at COP27 in order to bring actors together across the climate finance ecosystem. And we really want to leverage your resources and your knowledge in order to better improve how both USAID functions in the field in the countries we work in and our development partners across the board. So not just limited to what might be traditionally viewed as climate activities in renewable energy or sustainable landscapes, but also in our work in agriculture, our work in water, health, democracy. We see, climate touching everything, and the gap in getting resources to those goals are pretty significant. And we're hopeful that the CFIN can help us create opportunities for collaboration and learning in order to essentially harness that knowledge and, again, deploy that in our projects. In just less than 1.5 years, we've been able to grow our network for over 1,100 people from climate finance seekers, providers, and actors with a diverse range of skills and expertise. That's pretty huge. So just to say thank you for all of you who've been actively following the emails that have come out. And since today is the first time we're actually gathered as a virtual group, we welcome your feedback on how our webinar goes today. So we look forward to working with you throughout the year and delivering our climate impact goals to improve economic productivity, working on sustainable supply chains, and looking for ways to ensure a just transition. I'll just go to the next slide to give you an overview of our agenda. We'll plan to give you a little bit more information on the Climate Finance for Development Accelerator and the network. We'll have some time for you all to ask questions, especially from those that have received grants under the Adaptation Finance Window, an initiative that is designed to especially target the gap in climate adaptation. And then we'll share some experiences on how we're partnering with donors and how grant capital can support this work. And so please do use the Q&A function in your above top area to ask questions. And then also, just let us know afterwards if you have feedback on how this could be beneficial to your work. Now I'll pass it over to Isaiah Oliver, our Deputy Chief of Party of CFDA. Thank you.
Excellent. Thank you, Sashi. Appreciate those intro remarks. We've got a lot to cover today, and we want to try to maximize time for Q&A, so I will go through this presentation fairly quickly, but we will be recording it, and we will share both the slide deck and a recording for those who may miss anything. So as Sashi mentioned, so we, on the Climate Finance for Development Accelerator, or CFDA project, I mean, we were created with a specific goal of helping close that climate finance gap that Sashi mentioned, which, while estimates vary, we believe that there's at least a 7 times increase in climate finance flows to emerging markets and developing economies that is needed to achieve the climate mitigation and adaptation goals that we're working together with other countries to try to achieve. And so to do that, today, sort of at the highest level, the fundamental issue is that the overlap between what private investors are willing to do and the universe of really high impact climate projects that support mitigation and adaptation is too small. And so what CFDA is trying to achieve in partnership with all of you and others across the ecosystem is to both increase the overlap between what climate finance providers and climate finance seekers are doing, so that there are more bankable climate projects and companies that do advance those mitigation and adaptation goals. And I'll say it's not just increasing the overlap between these two circles, but also increasing the size so that there are more climate finance providers, there's more capital, as well as more climate finance seekers that have the capacity to secure that capital. So just to quickly introduce the project, so the Climate Finance for Development Accelerator is USAID's flagship initiative to increase climate investment. So in emerging markets and developing economies. So everything we do is both focused on climate as well as finance and investment. Our mission is to mobilize $2.5 billion in public and private climate actions and investments by 2030. But we're not only about those numbers. We want to, in the process, help facilitate and strengthen locally led climate finance ecosystems that are able to increase flows of capital in the long run, so that it's we're not only helping move forward individual transactions, but also putting the ecosystem in place needed for these flows to be sustained and increase in the future. So a few features of CFDA that we see as critical to our efforts to mobilize capital faster, at greater scale, into areas where it'll have greater impact. First, we are a flexible platform, and that allows us to really work with our partners, both in the private sector as well as our USAID partners, to identify the real challenges that are holding back capital from flowing into these markets and design tailored solutions that are specific to those challenges. Second, we do bring intersectional expertise across sort of climate finance, development generally, and then the markets where we're working. And we try to leverage and maximize that expertise to design solutions that really reflect those various areas of focus to have as much impact as possible. And I'll say the CFIN is a critical tool for deploying that expertise. And then finally, I'll say CFDA is taking strategic risks that investors and many donors are unwilling to take. This varies across our projects, and from taking helping early stage climate projects to get to that critical stage where investors are willing to come in, helping to launch innovative new financial vehicles that have not yet been proven in the market, but we believe have a path to sustainability with some support. So for those who maybe have not engaged in the USAID on programs like CFDA in the past, I just want to give a kind of very brief intro to how CFDA works. So we are a large program, but we have essentially a portfolio of initiatives that we have co-designed with different parts of USAID. So that can either be country offices or offices that are based potentially in Washington, D.C., and those activities target a particular geography, theme, or sector within the climate finance space. So through CFDA, USAID, sometimes alongside other donors, funds the implementation of these activities and any associated grant awards or subcontracts. Here's a quick snapshot of the various activities that we are managing currently. We can share our Climate Links page that provides more information about most, if not all of these, but this gives a quick snapshot and a sense of kind of the universe of initiatives that are currently ongoing. And I will note that some of these are earlier stage, whereas others, such as the Egypt Red Sea Fund, are sort of nearing the end of their period of performance. So now I just want to pass it to my colleague, Marcela de Campos, who is a senior engagement and partnerships manager for CFDA and has played a critical role in launching the CFIN. Marcela.
Thanks, Isaiah. As Sashi and Isaiah both noted, the CFIN leverages over 1,100 members with expertise in climate investment and emerging markets and developing economies. The CFIN members are spread globally, with the majority in sub-Saharan Africa and the Western Hemisphere. In November of 2023, we launched the CFIN member database. This database includes organization names and technical, sectoral, and geographic expertise. We follow CFDA's data protection policy, which can be found on our Climate Links page, along with a list of CFIN members updated in real time. We encourage members to use the database and update the profiles, as well as make changes to the points of contact within their profile as needed. We'll resend those instructions after the webinar if you've missed them. So we have 3 types of CFIN members, which break down into 298 climate finance providers, 659 climate finance seekers, and 448 other ecosystem actors. You may recall that while completing the intake form, you were able to select more than one category, which is why these do not add up neatly to the number of CFIN members we currently have. Within these 3 buckets of members, the top categories are asset managers, entrepreneurs, and consulting firms. Looking at the CFIN from a bird's eye view, we know that clean energy, adaptation, regenerative or climate smart agriculture, nature-based solutions, and green infrastructure are the top areas of climate expertise that our CFIN members have. We've also learned that the majority of CFIN members have climate finance project development, strategy development, training, climate finance measurement and impact evaluation, and pipeline development institutional capabilities. These are simply the top 5 in each category. The breadth of climate expertise and institutional capabilities is spread across a broader spectrum. We are incredibly excited about the expertise and capabilities that CFIN members have, and we're very eager to engage with everyone. However, we also recognize that we have limited bandwidth to engage with all members. So in response to this, we launched a new program in November of 2023 called the CFIN Pitch and Information Sessions. This program allows CFIN members to share their climate finance related ideas directly with CFDA team members. Since its launch, we've met with 20 organizations representing financial products and mechanisms, nature-based solutions, climate smart agriculture, climate resilient infrastructure, and more. The sessions are short, they're speedy, and each are 20 minutes, and we spend the first half on the proposed concept or pitch and the latter half on Q&A. Some outputs include recommendations to partners on ongoing funding opportunities, CFIN member feedback to CFDA, and a greater understanding of our objectives, as well as how to work with us. Beyond the CFIN, CFDA is implementing several activities, as Isaiah noted. In this next section, before the Q&A, we will dive deeper into a few of those activities, starting with Climate Gender Equity Fund, presented by Technical Director Carrie Dittmeyer. Carrie, over to you.
Thanks, Marcella. Of the over 600 billion in climate investments in 2019 and 2020, less than 2% of that was invested with a gender lens. This is just one of the many data points in the ever-growing body of evidence that demonstrates the critical role women play in climate mitigation and adaptation, but yet how they are consistently left out of programs and climate finance. Yet women are innovators, leaders, entrepreneurs, employees, and customers in many climate-related fields, and often driving these climate solutions for their communities and their families, and across the world globally. We see women at the forefront of climate mitigation and adaptation solutions. And so at COP27, the U.S. Agency for International Development, supported by Amazon, launched the Climate Gender Equity Fund, which was one of the first major activities launched under CFDA. And so I'm really excited today to just give you a quick high-level snapshot of what the Climate Gender Equity Fund aims to do. And so if we shift to the next slide, we won't go through all of this, but you can really see that CGEF aims to take a whole of ecosystem approach to catalyzing gender equity in climate finance. And we do that through a pooled grant vehicle that's an innovative public-private partnership model that brings together funding both from USAID and private sector donors, foundations, corporations. To date, that includes Amazon, the UPS Foundation, Visa Foundation, and Reckitt. And we use that pooled grant vehicle to disperse grants to those women-led and women-benefiting solutions at the forefront of climate mitigation and adaptation. And that includes grant making through network organizations, intermediaries, and investment funds that are either building the capacity of women-led and women-benefiting climate solutions or investing directly into those solutions. And so on the next few slides, I'd love to spend a ton of time going through our incredible first cohort of grantees, but just to give you a high-level snapshot, we were thrilled to announce our first 5 grantees over the last several months, and that includes 3 network organizations and intermediaries that you see on your screen here. So those are really the incubators, accelerators that are strengthening the capacity of women climate entrepreneurs. And then on the next slide, you can see we also awarded grants to investment funds. So these are 2 incredible women-led investment funds that are investing directly in women-led, women-benefiting, and gender-responsive climate solutions. We know that 5 grantees is really only the tip of the iceberg, and we have such a long way to go to close this massive gender climate finance gap that I called attention to at the start of my remarks. And so thrilled to share that we actually have our next funding round currently live. Our funding rounds are managed by our incredible partner, 2X Global. And so if you haven't seen already, we sent out to the CFIN this opportunity for our next funding round, which closes in the next few weeks. So if you are an investment fund or a network organization like some of the ones you just saw on your screen here that are really strengthening the capacity of and investing in these gender responsive climate solutions, we welcome you to apply and take a look at the RFP and see if it fits your profile. And as I mentioned, these opportunities will be managed moving forward by 2X Global, but they'll always be shared as an opportunity through the CFIN. So hope that you keep an eye out for these future opportunities and really join us in this movement to catalyze gender equity in climate finance. Thank you, and back to you, Isaiah.
Thank you, Carrie. So I'm just going to talk through a couple of other CFDA initiatives quickly so we can have some time for Q&A. One activity that I'm sure many of you have seen is the Caribbean Climate Investment Program. This was one of the first initiatives launched by CFDA in early 2023. And the goal with Caribbean CCIP is both pretty heavily oriented towards mitigation and helping to increase energy access, as well as reduce the dependency on imported diesel for Caribbean nations, which is both very expensive and also exposes Caribbean countries to fluctuations in the diesel market, which causes significant challenges. And so to support both the expansion of renewable energy as well as adaptation investments, CCIP integrates three mechanisms: a project preparation facility, a grants program, and on-demand technical assistance to strengthen the capacity of SMEs and facilitate matchmaking with investors. To quickly highlight some progress made, so we launched the grants program almost a year ago to the day, and since then we have received a lot of interest from potential grantees, including, I'm sure, many folks on the call. We are currently have either awarded, are in negotiations, or in the final review stages of 9 grants that represent $4.9 million of grant funding, with that pipeline expected to mobilize $65 million in additional capital for these critical investments. And then the second piece I just want to highlight, because it is an open opportunity, is the project preparation facility, which was launched at the beginning of the year. That is being implemented by PFAN LAC. And the project preparation facility's goal is to provide business advisory, investment facilitation, and deal structuring services to at least 40 climate project developers in the region. And so if there are folks on the line who have not expressed interest but are working in the Caribbean and might have a mitigation or adaptation program, we strongly recommend that you express interest. And then finally, the Adaptation Finance Window, which is going to be a focus of our panel discussion. At the beginning, we talked about the climate finance gap. While massive, the reality is that significantly more funds are flowing towards mitigation than they are for adaptation. And so we launched the Adaptation Finance Window in late 2023 with the goal of helping to increase focus on the adaptation finance gap and to mobilize capital to close that gap as much as possible. And so for those, I'm sure many of you remember seeing, but we've had 2 sort of rounds of grant funding opportunity under the adaptation window. Round 1 focused on parametric insurance and water, and we have awarded 4 grants on the parametric insurance side, valued at $1.5 million. And we will be talking with some of those grantees in just a few minutes. And then round 2 was focused on adaptation-oriented investment funds, and that was both a USAID grant opportunity, but it was managed kind of in coordination with Nordic government partners in Denmark and Sweden, with the hope that those donor partners would be able to use debt guarantees alongside USAID grant to have a significant catalytic impact on new investment funds. So with that, I'm going to quickly move over to Q&A and ask Marcella to highlight any questions that we have before the panel discussion.
Sure. We have 2 questions. The first is, CFDA's goal is to mobilize public and private capital. Can you talk about CFDA's balance between the two, given this, quote, in OECD countries, 81% of green investment is funded by the private sector, yet in emerging economies, that proportion drops to 14%?
Yeah, that's a great question. Put simply, I think that almost everything that we do is oriented towards maximizing private sector capital. That doesn't mean that we can only focus on private sector capital. Many of our initiatives do work in partnership with DFIs or other donors, because the reality of the market is that that's often what is needed to bring private investors to the table. But I would say, as a general rule, that private investment is a priority for us, and we do value that significantly in all of our opportunities. So if you are working on issues related to private capital, please, do highlight them and bring them to the funding opportunities that we launch.
Thanks, Isaiah. The other question is, how can we organize a pitch meeting?
Yeah, so as Marcella mentioned, we launched these the pitch and information sessions recently, and we have been sending out periodic calls for concepts, and so we will be sending out another request for concepts. We do screen those concepts and try to prioritize the ones that we think are aligned with some work that we're doing or geographic focus of our activities, so that we can try to make that time as useful for our partners as well as for CFDA. But we do plan to continue that initiative and have really valued the opportunity to engage some new partners who we may otherwise not have the opportunity to engage.
Thank you. Those are all the questions I see now. I see a hand, but please use the Q&A function since the meeting chat and mics are disabled.
Thank you, Marcella. Okay, so now we will transition into the short panel discussion, but one that I'm excited about nonetheless. So we have the pleasure today to be joined by 3 of our grantees under the Adaptation Finance Window. All of these grantees were selected for initiatives related to parametric insurance. And maybe just before I introduce our partners and let them explain their concepts, for those who maybe have never heard of parametric insurance, just in the most basic form, parametric insurance is defined by a few kind of key factors. One, insurance payouts are based on predefined triggers, which we can talk about more what that looks like. Objective measurement, so some sort of third-party verified measurement that is not subjective. And then 3, fast payouts. And the fast payouts piece is really critical for adaptation, because what we want to do is create more mechanisms that allow folks in the countries where we work to be able to recover as quickly as possible from climate-related disasters. So hopefully we'll hear a little bit more about what these insurance products look like. But first, I would like to introduce Sarah Ebrahimi, who's head of institutional partnerships and personal lines at Blue Marble, and ask Sarah to introduce herself and give a quick overview of Blue Marble's concept that will be implemented with USAID grant support. Sarah.
Great. Thank you so much for the introduction, Isaiah. Welcome, everyone, and thank you for your time. So as Isaiah mentioned, Blue Marble, we are what we call ourselves an impact insurtech, meaning we have a mission to bring insurance solutions to the and underserved communities globally. And we do this through both parametric climate insurance products that are building and promoting climate and financial resilience. And we achieve this alongside with our partners. So a partnership with USAID and CFIN is entirely within kind of our typical scope of work. As you can see here, we have a broad portfolio of both private sector and public sector partners. We operate globally, as you can see on the map, and we've been doing this for quite a few years. We've been in business since 2016. So while we are a small firm, we aren't so much what I would call your typical startup, given that we do have this track record established. So what brought us to the CFIN is that we've been working in the agriculture sector of Kenya for quite a few years now, and we've been seeing that coffee production is one of the most important industries in the country, and it has been facing, a lot more complications due to climate change. So climate change has been threatening the sustainability of coffee production, particularly for smallholders with limited land. And these erratic weather patterns, they're posing a significant risk to their coffee yields. So Blue Marble, in partnership with Nespresso, in APA insurance, we've been tailoring a parametric insurance for these coffee smallholder products. Our insurance product is called Kinga Kahawa, which means protecting coffee in Swahili, and it aims to not only protect the farmers against income instability caused by poor coffee production due to adverse weather through covering risks like drought, excess rainfall, and extreme temperatures, but we've also added an innovative element to it, which is a revenue index insurance. So this is covering both the climate aspect as well as coffee price drops. So this is really innovative in the fact that we're protecting not only against the weather factors, but also against kind of the market factors that really are typically out of the farmer's control. So this is a solution where we've already been working with approximately 6,000 farmers, and with USAID support over the next 2 years, we'll be scaling this up to cover approximately 75,000 farmers, and this will enable approximately 7.5 million in mobilized funds. And this is going to also be adding in, since we're working with a local bank, approximately 562,000 of financing for both premiums as well as input loans. And as I mentioned, our partnerships are critical. To achieve this, we're partnering with a local bank that will help us significantly scale up the reach of our products. And we're also prioritizing women farmers and providing financial education in both local languages and collecting gender-specific data. So we hope that this is the start of a really great partnership with USAID, and passing it over to Isaiah to introduce our other panelists.
Thank you, Sarah. Very exciting. So next, I would like to introduce Simon Schwal, who is the CEO of OCO. Simon.
Hi there, and thank you very much. Sorry for the not very corporate background, but it's Labor Day here, and it's a holiday. So I'm Simon. I'm the CEO and co-founder of OCO. And at OCO, we, similarly to Blue Marble, we design weather-based index insurance. And we also what we describe ourselves as well as an insurtech startup. We launched in 2019, and we do two things. We design index insurance products, and we develop technologies to create products as quickly as possible. We automated a lot of the processes to be able to create new products for new crops, new location as quickly as possible. And on the other hand, we focus on distribution. So we observed that very often the problem was not in the product design, but in really reaching the farmers on the last mile. And we created a suite of tools, including web apps, APIs, mobile apps that are suitable for the target population. And we equip our partners with these solutions so that they can reach as many farmers as possible. We launched OCO first in Mali, then in Uganda, and then in Ivory Coast. And we have insured so far more than 27,000 farmers. The work we're going to do with CFDA is in Ivory Coast, where we're already insuring a few thousand of cocoa farmers. And we are now expanding to new crops in order to cover more farmers. So we're going to develop new products for 5 crops, including rice, including maize. I don't remember exactly now the 3 others, but 5 crops that are very commonly grown in Ivory Coast, so that we can reach more farmers, and especially more women, because we see that cash crops are dominated by male farmers, but food crops are dominated by women farmers. So it's going to bring more diversity to our insured farmers, and it will allow us to have a larger reach. So we're very excited to start this collaboration and to expand our activities in Ivory Coast. Thank you.
Excellent. Thank you, Simon. And last but certainly not least, Rohan Srinivasan joins us from Floodbase, where he is the head of finance and operations. Welcome, Rohan.
Thanks, Isaiah. So I'm Rohan Srinivasan, as noted. At Floodbase, we power new forms of insurance by monitoring floods continuously 365 days a year. So as many may note, 83% of flood losses right now are uninsured. And so Floodbase provides an insurance data solution that unlocks that unprecedented financial protection gap that we have right now in the era of the climate crisis. And so the way that we do this is we use near real-time monitoring from satellite imagery, as well as machine learning algorithms to determine the state of flooding in a given area. And so the program that we currently have in place with USAID and the CFDA is doing monitoring for Malawi and Mozambique. Obviously, these are areas that are especially flood prone, and in the past 2 events, a lot of smallholder farmers have been left uninsured. And so what our program is set up here for is we are looking to work with smallholder farmers as well as brokers and local distributors to ensure that they have access to flood coverage in addition to whatever other coverages they may have. So many may be familiar with the concept of drought insurance as it relates to your seed. But what Floodbase is working to do is potentially work with agro dealers as well as loan issuers to ensure that we're able to insure them against flooding as well. So the way that we bridge onto this program is we currently are doing a similar initiative in Colombia. And so we have similar experience in the space. And outside of the insurance space, we've also been working with the World Food Program to work with their disaster response teams in Malawi and Mozambique. And so this felt like the natural intersection between the two to bring a new solution in parametric insurance to a needing area.
Excellent. Thank you, Rohan. Okay, so just to ask a couple questions, and then we'll open up to the audience. I think, all of those insurance initiatives sound really interesting and impactful. I guess I'm curious, you're all sort of proposing to work in somewhat challenging markets, and maybe targeting sort of smallholder farmers, which could present challenges in terms of adoption. And I'm curious, maybe we can go back to Rohan, just to switch up the order. And if you could highlight one sort of critical factor or challenge that you see for the pilot success, what do you see that being?
Yeah, so I think the most important thing, and I think this is true for insurance products across the board, but especially here, is our ability to get access to these smallholder farmers, and that's going to be on the distribution side. So right now, getting access to those vulnerable communities and the individuals who are most impacted by it, we're able to design the flood product. We have the right partners in place to make sure that we have the right product. But getting to that kind of last touch point, building trust with the policyholder and the end buyer, as well as making sure that we have a product that's easy to understand, that is intuitive and is similarly as well priced. Hitting all of those boxes really requires you to have strong relationships with your distributors. And in the insurance space, especially when you're launching something that is a little bit novel, that ends up becoming a major challenge for most businesses here.
Excellent. Sarah, I'm curious your perspective from the Kenya side of what you see as potential challenges, or what are the critical factors for this pilot being successful?
Yeah, absolutely. And I think that this is one that touches not only in Kenya, but across all of our markets. It's the first to be our partners on the ground. So, in Kenya specifically, Blue Marble's worked for the past 2 years with Nespresso. They provide access to the farmers' cooperatives, and they partially finance premiums. We then have APA Insurance, which is the insurance company on the ground that actually is underwriting, and they help market the coffee insurance product as well as retain part of the risk. Equity Bank, I mentioned, they're our bank partner, and they're committed to offering premium financing. And then the second critical success factor is definitely along the awareness raising and education piece. I know I mentioned that APA, they do a little bit of the marketing of that insurance product, but really it's our on the ground financial literacy and risk awareness training. Rural farmers, globally, they suffer from low financial literacy and knowledge gaps, particularly when it comes to the important role that insurance can play as a risk management tool, especially against climate change. So Blue Marble understands this well, and we conduct trainings with our farmer groups. And furthermore, farmers, they often face challenges in covering the upfront costs of insurance premiums. And so Blue Marble, that's where our partners with our local banks that help kind of ease that purchasing power and liquidity constraints, that really is helpful in these markets that we're working in, because the banks, they're not only able to provide that premium financing in the instance where donors or other partners are not, but also they can potentially bundle it with their current financial products to make the process a lot easier. Thank you.
Thanks, Sarah. Yeah, that makes a lot of sense to me. I think, I mean, fundamentally, there needs to be the trust to buy in and believe that that insurance company is going to be there when they need it, and working with local partners to secure that trust seems like a fundamental challenge. Simon, what's your view on this and the as you expand your work in Ivory Coast?
Yeah, so unsurprisingly, my answer will be quite similar to what the other speakers have said, because we face the same kind of challenges. So yeah, as Ron said as well, we are also confident to build a good index insurance product. We have the right data, we have the right expertise, but the big challenge is to find the right distribution partners. So we have initial partners that can bring us, can connect us with communities of farmers, but we need to find more partners to reach as many farmers as possible. So that includes, as Sarah said, also banks and microfinance institutions. It can include NGOs and networks of cooperatives. It can include agro dealers, and it's difficult to find the right partners and to align the objectives, to align the success, what we call the success of the project. Yeah, so really finding the right partners and keeping these partners motivated and getting their own network of agents or representatives well trained so that the right information is passed on and the right expectations are built with farmers is the key challenge for the success of the project. Not so much the design of the product, but really the distribution to the last mile.
Excellent. Yeah, that makes sense. Simon, I'm going to come back to you if that's okay. I'm curious, or your perspective, what the role of donors should be in introducing new parametric insurance solutions, scaling them, and what donors can do to continue to play a catalytic role in this space.
Yeah, thank you. So ideally, we should be able to work with our donors, right? We are all for-profit companies here, and if the insurance product is working well, there is a demand. We all know that. So the objective is that we will work without donor funding, without grants, in a near future. But at this stage, there is still a lot of uncertainty. A lot of business models are being tested, and it's not yet clear what's the key business model for all for index insurance. We've managed to prove that farmers themselves can afford to some extent paying for insurance product, but we also see that states can be involved in subsidizing insurance, that companies like in the case of Blue Marble, Nespresso, for example, can also to some extent subsidize insurance. Distribution can be directly to farmers, can be through partners. So a lot of things are being tested, and for I think the next few years, we'll still need to pilot different solutions, pilot different products. As we've heard here, there are some purely weather-based index insurance products. There are some hybrid products. There are some revenue-based products. So it's great to see all this diversity of approaches, and we're going to learn a lot in the next few months and years from all these initiatives. But private investors, in their nature, they want to see a model that can be scaled, and that's when they can intervene, and that's where their role is yeah, that's where their role is. That's where they fit the best, I would say. So yeah, I think we still need a bit of grant funding, a bit of support from development organizations and yeah, organizations like USAID to test novel approaches and unlock this potential for index insurance.
Thank you, Simon. Sarah, how does Blue Marble see donor participation and where donors can have the most catalytic role in this space?
Yeah, great question. And so we found that in our experience, as Simon alluded to, really going into the design of kind of as we need to get more innovative due to kind of the actual weather and the landscape of the markets and climates that we're working in gets more complicated, we do need to continue innovating, because the same products that we have in place now won't continue to be the most effective or the most adapted to the market's needs over time. And so with this innovation and with the time and money that it takes to develop and to continue to kind of tweak our products to best suit the on-the-ground realities, that's where we see some of those upfront costs that donors can really step in and help cover the costs that Blue Marble incurs with our time and our research that goes into the development. And now on the other side of it, one of the questions that I saw come into the chat was along, we're working in really low income complex climates. How are farmers affording the premiums? And that's another place that donors can really step in. That's in subsidies. So Blue Marble operates in what we call a smart subsidy model, where we recognize that smallholder farmers or other groups that don't have any experience with insurance or have heard perhaps bad things about insurance, there is that really large barrier of trust. And I know, Isaiah, you spoke to that as well. The barrier of trust is a big one. And so being able to subsidize farmers' premiums for the first 2-3 years, and then eventually have it scale down over that period of time so that farmers begin, let's say, maybe paying 10 to 20% of the premiums themselves with donors or other private sector partners, such as Nespresso in the example of Kenya, that premium percentage eventually increases. So farmers go from paying a very small percentage to being able to cover the premium themselves as they gain more experience, more understanding, and that they can see firsthand that this isn't kind of a trick that they're being forced to buy into, but really insurance does provide them value. And I can share an example from another market we work in Honduras with Nespresso, where last year Nespresso was subsidizing the premiums. The farmers this year, they're up for their first year of renewal, and we have 100% of the farmers putting their hand up to not only renew, but to be able to, they want to cover the premiums themselves. So this model works, and it's being able to have partners such as USAID step in to be able to cover that really does make a difference. Thank you.
Thank you, Sarah. Rohan, yeah, bring you into the discussion. To flood base, you're seeing similar areas where you think donors should engage, or?
Very much so. I think that kind of this time component that was addressed earlier, it is a case where, as I noted at the top, 83% of flood losses are uninsured. That leaves us with an incredible market opportunity. It leaves you the opportunity to focus in a lot of different areas. But as has also been noted, in sub-Saharan Africa, some of these challenges, it takes time. The total addressable market seems like it's lower on a per unit basis. And so if you're talking purely about kind of the scale challenge, it doesn't always look like the most appealing or the most lucrative, especially when you consider kind of the cost of training a new model and the cost of doing ongoing monitoring. But the long-term opportunity, when we talk about impact and we talk about kind of how we can actually maximize and show proof for the success of parametric solutions, it's largely going to happen in these disaster-prone areas and in areas where there are similar types of perils that are being covered. And so very much see this as an opportunity both to kind of direct companies' attentions like ours, as well as to afford us the time in order to do this right and have the patience that's required in order to make them successful.
Excellent. Yeah, thank you, Rohan. I'm going to bring in some questions from the audience now. The first one, which I think is a good one for folks to sort of understand how your products work, is about trust and payouts. And the question is, what has the claims experience been like for farmers, and what percentage of claims are paid? I'm not sure all three of you need to answer this, but it'd be good to know, like, sort of how these parametric insurance products work on the ground, and if when there is a flood, and I'll bring in Sarah, if there's a flood or drought in Kenya, how are these payments being dispersed?
Yeah, that's a good question. Thanks for raising it, Beth. I think there's kind of two parts to the answer here. I think what makes parametric insurance really unique is that it's not your typical claims process. The farmer doesn't need to be involved in it. So the farmers indeed won't have that negative experience of submitting a claim and then being told, no, you didn't read this fine print, or it's being rejected for that reason. But what does happen in parametric insurance is something called basis risk. Basis risk is the risk that the on-the-ground reality is different than what, in the case of Blue Marble, we work with global satellite sensors, so that there is a disparity between kind of what happens with the sensors and what happens on the ground. And so this is where, the investment in technology and really being able to pay for the highest quality of satellite data to have the lowest level of granularity, so that we're really looking at, like 1 kilometer by 1 kilometer areas versus, a 20 kilometer by 20 kilometer area. So to have that higher level of granularity, that definitely helps with basis risk, as well as our on-the-ground farmer training to really make sure that they understand and that the product is explained to them in not complex terms. And then the third piece that I'd add in is really, what are we offering to them in terms of tangible benefits? Because if the farmers view the insurance product as something that, only happens when it's absolute worst case scenario, but they receive no day-to-day benefits from it, they might come out feeling like, okay, if there isn't a claim this year, then there is no benefit to it. I can share an example from India where we have an extreme heat income protection product for women. Now, in the state that we provided the insurance with last year, it actually was the 8th coolest heat season in the last 124 years. So this is a product that we designed with the best of intentions to have payouts, but it just happened to be a relatively cool year. But the women, they came out of it because we provided them with the option to either have a solar lamp, a shade tarp, or a water cooler. They said, we still are happy with the insurance because we had these tangible benefits. So that's also part of that trust building and trying to get our customers to see insurance as a critical financial service, not just as a nice to have.
Excellent. Yeah, thank you, Sarah. I'm going to switch to a different question, which I think, Sarah, I think you somewhat answered from the Blue Marble perspective. So I want to bring in either Rohan or Simon. How do you solve the issue of affordability of insurance premiums in these contexts where financial resources are scarce? And I'll let Rohan or Simon, if you want to jump in. Simon, do you want to start? Go ahead.
I can start. So there are a few things. One thing that we've been told is that farmers cannot afford insurance by themselves, and it needs to be subsidized by the state or by another organization. So initially we disagreed with this statement, and we managed to prove that farmers are able to pay themselves. Out of the 27,000 farmers we insured so far, the vast majority paid by themselves, but we had to make things much very flexible and easy to afford. So farmers can pay with their mobile phone, with their mobile wallet. They can pay in as many installments as they need. So yeah, they can pay as much as they can whenever they can until the due date of payment. And even if they didn't pay the full amount, we will adjust the cover to what they paid. So these are all small things that help to make it affordable and make it easy to start getting insured. So that's one part of the answer. But we also realize that indeed this remains the biggest barrier is affordability. Farmers have a lot of costs to incur, especially at the beginning of the season, and it's very difficult to add another cost to the activity. So we are testing with different things. There are markets where there is indeed state subsidy, but it doesn't always help because the subsidies are dependent on the budgets that are voted. In Uganda, we've had bad experiences with that. So we try to also look at other alternatives. We just launched a service where the diaspora can pay for their relatives. So farmers can reach out to their relatives that work maybe in Western countries, in Europe, in the US, and with international payment, these relatives can pay remotely. We're partnering with food industries, and as part of the sustainability project, some have funding to partially subsidize insurance as well. So yeah, for now it's a mix of these two things, making payment as easy as possible for the farmers themselves, and at the same time trying to find other parties that can contribute to insurance to make
very cool.
Insurance more affordable to them.
Yeah, the diaspora approach is very interesting. Yeah, in particular. Rohan, I'll give you the last word. You can talk about either sustainability of or affordability or the claims experience, whichever one you would like to address.
Well, so I think on this point of affordability, it's obviously the thing that's top of mind because it's going to be the thing that determines whether or not we're able to be successful. And I think it also points to something that Simon had noted earlier when he was talking about being a little bit creative with your distribution partners. I think a big part of how we can be successful is making sure that we're developing a product with the right distribution partners, and potentially ones that aren't necessarily just thinking of it purely as a brokering relationship. And so as you look to find partners who are potentially doing loan relief or who have other financial instruments that they're considering as part of it, that also can address some of the affordability gap.
Excellent. Thank you. Huge thank you to Sarah, Rohan, and Simon for taking some time out of their busy schedule to talk with us today. We're unfortunately out of time, but I hope that all of the folks on the line found this discussion interesting and useful for your work. As I said at the beginning, we'll be sharing a recording and a slide deck, and look forward to continuing to engage the CFIN. Yeah, thank you everyone for joining us today.
Thank you, everyone.
Have a good day.
Thank you.